Hey traders, let me ask you a quick question. Have you ever wondered why you can be right on the direction of where a currency or the index is going, but still lose money on your trades? If that sounds familiar, stick around because in this video, I'm going to share with you a simple but game-changing tip that I hope can instantly improve your Forex trading results and hopefully your strategy in general. And no, it's not about using some fancy new indicator or downloading a bunch of new tools. It's a concept, a very important concept that has made a massive difference in my own trading, and I hope will help transform yours as well. So if you're serious about becoming a smarter, more consistent trader, please hit that subscribe button and turn on notifications because we drop trading videos like this every week that you won't want to miss. Now, let's dive in. One of the questions that I get asked all of the time is, Kathy, how do I know which currencies are strong and which ones weak? This is such a great and important question because it's one, if not the most important question that I ask myself every day, and it's key to my own trading decisions. The truth is, the Forex market is driven by relative strength, meaning you're not just buying or selling one currency. You're always trading one currency against another. That's why figuring out the strongest currency and the weakest currency can make all the difference in your success. And if you learn how to pair them together properly, that's your trading edge. Now, you may already know that 80% of all Forex transactions involve the US dollar. That's why the US dollar, US data is so important. But think about that for a second. That means the US dollar is kind of like the elephant in the room. It affects almost every major currency pair: Euro, British pound, Australian dollar. On any given day, they often will move in the same direction against the greenback. And that's what we call correlation risk. And that can quietly make or break your trades. For example, being short Eurodollar and short pound dollar at the same time isn't really two separate trades. It's like doubling down on the same position. Even though you think you're diversifying, you're long Eurodollar and short dollar Swiss, that's also basically the same trade because you're short US dollars. Now let's add one more layer. We're living in a world where a single tweet about tariffs or trade wars can shake the US dollar like an earthquake. So relying on US dollar pairs, because sometimes when you're trading on unstable ground, because either all the trades are going to work or all of them won't. So how do you avoid that? I like to focus on currency crosses, pairs that do not involve the US dollar. These are my favorite because they often have cleaner moves with less volatility. And the best part, they're perfect for pairing strong versus weak. So how do you find the strong and the weak? Let me walk you through my top 3 trading tips. Tip number 1, watch the economic calendar. Here's my daily checklist that I use. This is the process I go through every single day to identify my trades. Right on top is economic data. This is my bread and butter. Every single day, I check the latest economic reports from around the world. It's the first thing that I do. Then I will take a look at how stocks are doing, how bonds are doing to gauge what the market sentiment is. But when it comes to data, let me give you a real-life example of a trade that we recently took. On this given day, New Zealand reported a surprise uptick in business confidence, while Australia showed weaker than expected consumer and business sentiment. Right here, I thought, the Australian dollar could weaken against the New Zealand dollar today. I also had a ZIP sell signal in the Aussie-Kiwi currency pair. Now, ZIP is my own go-to trading strategy, but you could use any of yours. But with economic data on my side, I had the confidence, this gave me the confidence to sell Aussie Kiwi. I personally have been trading ZIP for the last 10 years. And if you want to learn more about how it works, click on the link in the description below to join our free trading community, to watch the Forex Starter course and the videos on ZIP. But let's talk about tip number 2. Look at the percentage change at the start of the session. I know this sounds very, very simple, but it can be an incredibly effective guide. At the start of the New York session, I pull up the percentage change chart for all of the major currencies. Then I'll ask myself, what's up? What's down? Let's say the euro and British pound are down 0.5% against the US dollar, but the Australian dollar is flat. That tells me something. Maybe there was good Aussie news keeping the Australian dollar afloat, or maybe it was just no news at all and we had bad news out of Europe that dragged the euro and British pounds lower. Either way, that difference in how those currencies are performing against the dollar gives me a big clue. And here's the cool part. The trends we see during the London session often carry over into early New York and makes it tradable. So the euro's already trending lower against the Australian dollar and Europe. Chances are it could keep going for a while because there's probably a reason why it's happening, unless of course there's some headline that changes the outlook. That might give me a reason to sell euro versus the Australian dollar. Tip number 3. Look at how commodity prices are doing. This is especially useful if you're trading the Australian, New Zealand, and Canadian dollars. Those currencies are what we call commodity currencies, which means they tend to move in line with gold, oil, and other natural resources. So if oil is spiking, perhaps CAD will get a boost from it. If gold is dropping, it might weigh on the Australian dollar. Now, that's not an exact science, but it adds another layer of possible confirmation that can make your trades more effective. But here's the thing. Strong versus weak doesn't and cannot work in a vacuum. I never trade it alone. I always combine it with technicals and my trading strategy, ZIP. Let's say I see a sell signal euro in my ZIP setup, but there's a big US economic report coming, or I'm kind of unsure about how the US dollar will react. I'll look for other pairs. Maybe CAD is stronger than the euro, or maybe the Swiss franc is rallying. So if I'm bearish the euro and CAD is strong, euro CAD could be a great short trade. Once I've established my view, I'll check my ZIP charts. If it's in the sell zone, boo, trade setup confirmed. If not, I'll stay in the sidelines and look for another pair. One more thing, I always check for technical clearance. That means I don't want to be selling into support levels or buying into resistance. I look for clean charts, open roads, and I use moving averages for that. Basically, I want prices to have room to run without crashing into moving average resistance or swing high, swing low levels. Even if you're not trading currency crosses or avoiding the US dollar, I think it's really important to know what's strong, what's weak every single day. Why? Because if you're buying a weak currency and selling a strong one by mistake, it's like you're swimming against the tide. It can make it much more difficult to turn a profitable trade. And you could be setting yourself up for losses. This is a simple habit. Pairing the strong with the weak, this simple habit can make a huge difference in your trade selection. So to sum this up, if you're a trader looking to improve your edge, start by tracking daily economic reports and news, percentage change during key sessions, and commodity correlations. Then combine that with technicals and your favorite trading strategy. ZIP for me, maybe something else for you. And you'll start seeing how powerful this simple concept really is. And if you want to go deeper into this, join my free trading community. The links are in the description. We talk strategies, fundamentals, setups, and more. There are videos in the Forex Starter course, which is free, on how to use ZIP. You'll be surrounded by traders who are just as committed to getting better every day as you are. Don't forget to subscribe to the channel, give this video a thumbs up if you found it helpful, and drop a comment below if you have any questions or you want me to break down more trade ideas using strong versus weak. Thanks for watching, and remember, it only takes one good idea to change everything. Happy trading, and I'll see you all in the next video.